What up, Crypto Warriors? It's Sergeant Crypto back at it again. Today is Tuesday, March 12th, 2019. Great minds discuss ideas. Average minds discuss events. Small minds discuss people. Eleanor Roosevelt. She was the first lady. Her husband was Franklin Delano Roosevelt, longest serving president and first lady, 4 terms. Happy birthday, World Wide Web. 30th anniversary of the World Wide Web. First, the revolution was the decentralization of information. Now it's the decentralization of value of money, i.e. Bitcoin and cryptos. Let's get into it. Bitcoin would survive recession, but Ethereum might crater. So says Kyle Chapman. He's coming from a venture capital firm, Cosimo Ventures. So after Sunday's interview on 60 Minutes, Jerome Powell, he's the Fed chair, said that there will not be a recession in 2019. But who knows, right? We know that there's one coming because this is the longest bull run in history. What goes up must come down. But according to Mr. Chapman here, he's saying that Bitcoin will function as something similar to gold as a safe haven due to its inherent scarcity and decentrality. Bitcoin by design is not intended to be used as a foundation on which developers could build a platform or enterprise. Because its supply is not controlled by any one person or entity, it's more likely that Bitcoin will perform independently of broad market pressures, akin to how one would expect gold to react, potentially even appreciating in value should demand for alternative forms of dependable value storage arise. So then he gets into Ethereum, where he states, because Ethereum is a developer-focused blockchain, it's very much dependent on how many companies use the Ethereum platform to build their projects. If those companies were to go out of business, Ethereum's relevance and subsequently its price would undoubtedly be affected. Then he goes into XRP, saying because XRP function outside the purview of mainstream markets, it's certainly reasonable to believe XRP would act independently in the event of a recession. On the other hand, however, XRP's price is highly dependent on issuance and adoption. If Ripple loses usership, either because its issuance was mismanaged or because other projects such as JPM Coin, which is non-relevant, become more popular, XRP's value would almost surely go with it. I don't know about all that. So he's stating that because, and I agree with some of what he's saying. So Bitcoin as a store of value, we'll see that people, traditionally they would run to gold in a recession situation. However, first what will happen is, as everything is tanking, the traditional equities market, stocks are going down, people will be selling to try to save their value, meaning, transferring from stocks into fiat right into the US dollar, right? So we're talking about the US here. So they'll be transferring from stocks going right into the US dollar, and at the same time, they'll be doing the same thing with gold. If they have any gold, they'll be selling gold as well. So in the immediate situation, what's going to happen is, as stock prices and the market's crashing, people will sell all their, pretty much not all their assets, but most of their assets to get into dollars, all right? Because again, the almighty dollar, right? But eventually, in the short term, they'll go back into gold to store their value. And now we have something like Bitcoin, which is considered now to be a digital gold. We'll see a lot more people transition into Bitcoin as well. So we don't know. Actually, we don't know. We don't have any. Bitcoin has been around for this whole bull market, and we haven't seen it perform in a stressful situation. But with what he's saying about Ethereum and developers, not spending money, yay and nay, right? My thing is, if that was the case, right, we would see the price of Ethereum continue to go up if that was the case during the crypto winter, the crypto bear market, because the traditional equities market, the traditional stock market, they're in a bull run. So they have a lot of money, all right? They have a lot of disposable income. So they would be spending it on experimental ideas such as Ethereum, you know? So in that sense, that, you know, I don't agree with him in that sense. I think all cryptos will benefit in a recession, especially Bitcoin, because of the fact that, you know, it's a store of value. And as everything goes up, you know, as Bitcoin goes up, I should say, everything else follows. All right, all other altcoins seem to follow. So in that sense, I don't agree. You know, that basically Ethereum would be affected because of the fact that, you know, people won't be spending money to develop things. Because it's like I said, if that was the case, then the opposite would be true too, because they have money now. So why wouldn't, you know, Ethereum's price, you know, be shooting up while everything else is tanking? So, you know, that's just the way how I see it right now. You know, let me know in the comment section below. All right, SEC's crypto mom to Bitcoin hodlers, accredited investor law need to change. So an attendee at the 2019 MIT Bitcoin Expo on Saturday got a round of applause when he asked SEC Commissioner Hester Peirce, a panelist at the event, the following question. I think one of the biggest philosophical issues that many of us in crypto have with these types of regulations is around our chafing at the prohibition of retail participation. It may be hubristic, but many of us are not independently wealthy, but we still believe we can make good investment decisions. And right now, we're kind of excluded from participating. So my question is, how can we move the accredited investor laws away from wealth thresholds and towards something that's frankly more reasonable and accessible to mainstream investors? Great question. And that's what she said. You know, she said she loved the question. And she is a proponent of Bitcoin and crypto. And she doesn't like the current state of affairs in the SECs and at the SEC, where they keeping out, you know, the retail investors, i.e. yourself and me, out of the game. They're keeping us out of the game because we don't have, you know, the big money. So here's a response. I love that question, and I wish that there were a lot more people like those of you in the room who are clapping. Our accredited investor rules effectively say that you have to have a certain wealth level or a certain income level in order to participate in certain types of investment products. I personally think that those rules are not consistent with what this country is about, which is about people taking opportunities, taking their talents and their intelligence and applying it to make their lives better. And we've put this artificial barrier in place so people can't do that. I can't even argue with that. You know, we saw that in 2017 in the ICO craze, when before the SEC started cracking down, and, you know, regular everyday Joe people were investing in ICOs. Yes, some of them were scams. Okay. However, some of them weren't, or even if they were scams, people still was able to make a lot of money through those investments. And it's your money. It should be your decision to make those investments. If you get burned, oh well. You know, and that's what she's saying right here as well. If I were running the show, what I would do is you could opt in to the securities framework if you want to opt in. Otherwise, you can be outside of it. And that means you better make your own good decisions, because if you make a mistake and you lose all your money, don't come crying to me. We're all adults. I mean, she couldn't have said it better. You know, we're all adults. You know, if someone gets burned, then you get burned. And if, you know, someone is breaking the law, all right, by lying and, you know, just doing fraudulent activities, then they should go to jail and things of that nature. You know, get prosecuted and all that. And if you could get, you know, recoup some of the money, then you could recoup some of the money. But allow people to invest, man. Allow people to, you know, participate in this game. You know, everyone should be able to have the opportunity to participate. And that's basically what Hester Peirce is saying. You know, people should participate, and they're thinking about changing the securities laws to allow us to participate. You know, I feel that maybe we should take some kind of online test or something, show our competence when it comes to investing. You know, some kind of online certificate, you know, you get certified through the SEC. I don't know. Or just allow everyone, hey, if you have money, you want to participate, you want to put a, you know, a little $500 into something, you know, to crowdfund some kind of ICO or some kind of project, and they are allowing for, you know, regular investors to invest, then so be it. Who cares? You know, it's your money. All right, and that leads into my next and final story here. This one's coming out of Cointelegraph. Texas proposed bill requires identification of buyers paying in digital currencies. Texas, man, y'all getting it wrong, baby. You need to follow Wyoming and Colorado and Maine. You know, follow those states. But here it is. All right, a bill requires. All right, the bill's text contains the definition of digital currencies, digital wallets, distributed ledgers, and this new thing, verified identity digital currencies. The latter is defined as a digital currency that allows the true identities of the sender and the receiver to be known before a person has access to another person's digital wallet. Per the proposed bill, before accepting a payment in digital currency, a person must verify the identity of the person sending the payment unless a VIDC is used. Moreover, the proposed regulation also specifies this state may not use a digital currency that is not a verified identity digital currency. Man, so Texas, man, Texas. Getting it wrong. That's the whole point of Bitcoin, to have a trustless system where I don't even need to know the person on the other end of what's happening. You know, if I'm purchasing something online, you know what I mean? I don't need to know the person. I just need to know that the crypto is going to come through. The Bitcoin is going to come through, you know, once they send it. So, I don't know. Yes, it kind of makes sense because, you know, of on-time money laundering and, you know your customer and all that good stuff. But at the same time, no, man. You're getting it wrong, Texas. And I think doing something like this, if it does get approved, right, will, you know, hinder Texas in the fact, or in the form of they're stifling innovation. They're going to stifle innovation in their state. You know, no crypto company is going to want to go there to do business because they're so restrictive. And I don't think that these people get crypto. All right, but you know, let's discuss it in the comment section below, man. You know, and let me know what you think of these 3 stories. And as always, thank you not for following, but thank you for the support. And smash up the likes, hit that subscribe button and notification bell to get notified when I upload new videos. It's your boy Sergeant Crypto, and I'm out. Peace. Texas need to get it right, baby.